Hey everyone, Nike reported quarterly financial results that sent the stock price down by almost 20%. In this video, I'll review that quarterly financial update and highlight and discuss why the stock price fell, what were the specific items that caused the stock price to fall. I'll also highlight some of the good things that came out of Nike's latest quarterly investor update. It wasn't all bad news. Additionally, I'll update my buy recommendation for Nike stock. I'll let you know if I still think the stock is a buy. Coming into this investor update, I had ranked Nike as one of my top stocks to buy in 2024. Am I keeping it there after this update? I'll let you know at the end of this video. So let's begin with the earnings review.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Nike reported full year revenue of $51.4 billion compared to $51.2 billion the prior year. That was up only 1%. Fourth quarter revenue of $12.6 billion was down 2% year over year. Now, this is for a company that typically grows close to double digits every year. So this latest year was a huge disappointment for Nike and Nike stock investors, and the slowdown in revenue growth is one big reason why Nike stock price fell significantly following the earnings results. But it wasn't the only reason, and I don't think it's the primary reason. I'll share with you the primary reason a little bit later in the video when we get to the company's specific segment results. So Nike direct revenues for the fourth quarter were $5.1 billion. This was down 8% year over year, while wholesale revenues of $7.1 billion were up 5% year over year. Now, this has more meaning than just the numbers on the surface. If you've been following the channel and watching my videos on Nike, you will know that Nike has undertaken a strategy whereby it's trying to go direct to consumers more so than it has in the past. It's trying to connect directly with its customers, cut out the middleman. You might say, why is it doing that? Well, simple, more profits. If you cut out the middleman, you sell directly to the customer, you can generate better profit margin because you don't have to give the wholesaler a lower price to allow the wholesaler to generate profit margins of their own. However, looking at this latest result, you'll notice that Nike had difficulty generating sales direct to consumers. That means that maybe it needs wholesalers more than it thought it did, and maybe this strategy of underemphasizing wholesalers was a mistake. That's another reason why investors are losing confidence in Nike, because if this strategy is not working, then that's a big blow to the management team. Typically, investors lose confidence in a company when management makes these big, bold moves, and those moves end up not working out. Now, I will say it's too early to determine if this strategy is not working out. Okay, it's too early to determine that. There were some good times with this strategy earlier during the pandemic when there were significant supply chain shortages. This was a genius strategy. If you have limited inventory and you're able to sell this inventory at premium prices on your own website, why send any inventory to wholesalers at lower prices? And so earlier in the pandemic, this strategy was a boom for Nike. Now, you're seeing some of the downside of that strategy. Nike had difficulty attracting customers to its websites, and wholesalers made up some of that difference. So you're seeing some of the ups and downs of strategic decisions from management. Okay, so remember how I highlighted it wasn't all bad news for Nike? And you see that starting with the gross profit margin for the fourth quarter, that was up by 110 basis points to 44.7%. So typically when you see declining sales were down 2%, you'll see declining gross profit margins. But for Nike in its latest quarter, that wasn't the case. So Nike prioritized profit margin over sales, perhaps a little too much, and that led to a decrease in revenue, but still profit margin increased. Nike's CFO, Matthew Friend, saying that we are driving better balance across our portfolio. And while we're encouraged by our progress, our fourth quarter results highlighted challenges that have led us to update our fiscal 2025 outlook. So they downgraded their fiscal 2025 outlook. Notice how when a company beats and raises expectations, they highlight that they raised expectations. But when they're downgrading expectations, they don't say they're downgrading. Sometimes they say they're updating instead of downgrading, right? But if it was an upgrade to their outlook, they wouldn't say update. They would say increase in most cases. Just a small thing I've noticed from companies' management when they describe changes in their outlook. Okay, so here was the big decline in Nike brand digital, the website, the app, and that was down 10%. Nike's stores, physical stores, sales were only down 2% there. So the biggest drawdown for Nike Direct was in the website and the app. Digital sales, that was down 10% year over year. Nike had difficulty getting people to go onto the website and make purchases. Additionally, revenues for Converse, which is a brand Nike owns now, of $480 million were down 18% year over year. So Converse is typically generating significant revenue for Nike annually, and the declines here of 18% is troubling and could point to significant competitive disadvantages for the Nike-owned brand longer term. So I highlighted the surprising increase in gross profit margin, and this was primarily due to strategic pricing actions. In other words, raising prices or keeping prices higher so that you generate higher profit margins. They also benefited from lower ocean freights, shipping costs, and lower warehousing costs, partially offset by lower margin in Nike Direct. So lower margins on the website and app as the company announced promotions and incentives to try and boost sales. Now I follow Nike Direct, Nike's website closely. I like Nike's shoes, and I did notice in the most recent quarter there were extra amounts of promotional activity and incentives. Some of their shoes were discounted significantly from their usual prices, more so than usual. So I did notice a lot of discounting from Nike in the latest quarter, which again surprises me how they were still able to generate an increase in gross profit margin. Sounds like the impacts from lower shipping costs were really offsetting those lower prices on the website and the increased promotional activity. Still, even when you think about a Nike shoe at a discount, you're looking at, maybe the full price of the shoe is $150 and they discount it down to $89. They're still getting $90 for a shoe, and it doesn't cost them anywhere near that amount to make the shoe. So the business underlying foundation is still very lucrative and profitable, as you notice here, a 45% gross profit margin. Also, Nike started noticing these troubles earlier, and they've cut expense significantly. Their operating overhead expense was down 9% to $3 billion, and this is due to lower wage-related expenses. They made a big restructuring, and they've already cut expense significantly. So I highlighted they already cut expense significantly, right? So even though sales declined in the quarter by 2%, the operating income, or income before income taxes, increased by 39% year over year to $1.72 billion, up from $1.246 billion. So even though sales were down and there was trouble generating sales growth, the company still generated very good profit expansion, anticipating the declines, anticipating the headwinds, cutting costs, and still generating profit growth. So kudos to Nike management for delivering on that. Okay, so I said I would highlight the biggest cause of Nike's stock price decline, and in my opinion, it's in declining footwear sales. So you'll notice in North America, footwear sales were down 6%, and in Europe, Middle East, and Africa, footwear sales were down 5%. In Greater China, footwear sales were up 2%, but overall the Greater China region sales growth of 3% was better than the rest of the world, which had sales declines. So it's not just the footwear decrease sales year over year that's troubling. It's the rising competition from new brands coming in and making a dent in the market, which makes investors fear that Nike's competitive advantage in footwear may be decreasing. And as you see, footwear is its biggest sales category in every region in the world. So if Nike's losing competitive market in footwear, that could be bad news for Nike stock investors longer term. All right, so after all of this bad news, the stock price fell roughly 18% on the back of this report, and Nike is now trading at a forward price to earnings of 20.45. This is the cheapest you've been able to buy Nike stock, according to this metric, going all the way back to July of 2021, which is all the data I have for Nike according to this metric. I wouldn't be surprised if it's the cheapest you've been able to buy Nike stock if you go back even further. Nike stock is trading at a very discounted valuation right now because of the troubles that it's having. There is cause for concern from Nike stock investors, which is bringing down the valuation. That being said, overall, the price decreases and the depressed valuation still makes Nike stock an attractive stock for me longer term. I like the brand. I like the consumer loyalty, the brand loyalty. I like the pricing power Nike exercises. And so I'll still keep Nike rated as one of my top 25 stocks to buy in 2024. Although overall, I was not happy with this quarter. And I would say within my top 25 list, Nike might be one of the stocks that is closest to being removed from the list on the back of these results if I start to see continued troubling information from Nike's footwear sales and increasing losses in market share in that category. I may need to revise Nike's prospects for this year and beyond. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.